Knowledge is power. Make an impact by learning more, or hire us to do it for you. Let us focus on what we do best so you can stay focused on what you do best. Find all of our options under services, one-to-one training, subscription-based training, or accounting and business consulting. Hello and welcome to another special screencast from none other than the world-famous Nerd Enterprises Incorporated and yours truly, Seth David. Today we're talking about contributions in QuickBooks Online. We're going to explain all about contributions in QuickBooks Online. I'd done a number of videos on the subject years ago in QuickBooks Desktop. I figured it was time for a good updated approach on this. So we're going to talk about three kinds of contributions people commonly make in their businesses, right? We can contribute cash. Certainly you do that when you start the business and you open up a bank account and put some of your own money into it. You're contributing cash into the business. And as you'll see when I demonstrate the transaction, it's very clear when you're looking at the balance sheet and the impact it has that we recorded a deposit, we put money into the bank account. The offset is that it's going into the equity section where contributions are, also on the balance sheet down in the equity section, and it clearly increases the value of the business by the exact value of the money we're putting in. There's no more direct or obvious way to increase the value of the business than to contribute cash into that business. Then we have property. It could be any number of reasons how and why we get to the point where we're contributing property into the business. Most commonly, again, I'm starting the business and I have some furniture laying around the house and I just rented an office, and rather than buy furniture, I had extra furniture I don't need at home and I want to contribute it, right? So we're going to look at an example of how to record that where we have furniture, let's say valued at $5,000, and how to record that entry. Finally, and the most complicated one, is contributed inventory. This also happens more often than you might realize. A common example I gave in the write-up is that you have inventory, let's say from a business you closed down and you're starting a new one that sells the same kind of stuff. So we have the inventory from the old business that we're contributing into the new business. And this is tricky because I can't just do a journal entry like you're going to see we do with the property, because I need to capture the actual items and their quantities and their individual costs. So we're going to look at these three examples starting with cash. First, we're going to run a report to make sure that you know that I have no tricks up my sleeve. I'm going to run my balance sheet. I'm going to change the date range to all, so you know anything that was recorded on this book would be reflected here. And as you can see, everything is completely zeroed out. I'm also going to do this so you can see the impact of each transaction that I record as I record it. So let's start with the first one, cash. So like I said, we're opening up a bank account, let's say. And let's say I'm reconstructing the books from last year. So I'll do it on January 1st, 2018. And over here is where we have, in this case, I called it owner contributions. And if you haven't checked the write-up, in the write-up I go into the explanations about some of the different nomenclature. If it's called owner contributions, we're probably dealing with a sole proprietorship. If it's a partnership, you'll probably see partner contributions. If it's an LLC, you'll probably see member contributions. So it's essentially the same thing. It's hitting the same area of the balance sheet, and it means the same thing as to the value of the business. But the nomenclature or the language changes depending on the type of company that we're dealing with here. So we're depositing it into the checking. The offset is that we're increasing owner contributions, and let's say it's for $10,000. That's what we want to start the business off with. Okay, when I hit save and close, you'll see that the balance sheet that a minute ago had zeros now has $10,000 here, $10,000 in the equity section under owner contributions. Total equity is $10,000. That literally is the value of the business as of this moment, right? The total equity is always the representation of what the value of the company is at that moment in time when the balance sheet is being run as of, right? So that's pretty clear and straightforward. Now let's do the furniture example. So if I contributed furniture, as I mentioned in the write-up, depending on where you got it and what kind of documentation you have on it, you may need to get an appraisal to assess the value. Otherwise, the general rule is the lower of cost or market. So let's say I also contributed this on January 18th, and let's say the value is $5,000. Okay, so now, and we're doing a journal entry because, again, nothing's affecting a bank account, so I can't run it through the bank, right? Because I'm not paying for it. Normally, when I buy furniture, I just write a check for it and book it to the asset account, right? So the debit is going to the furniture and fixtures account, which I may not actually have on these books. So let's just add it real quick. We're going to do a fixed asset. I wish I had a search on this one. There it is, furniture and fixtures, and we'll let it we'll let it name it the same thing as the detail type. Sorry, I tripped on my tongue. Save and close. So now we've got our asset account, and again, this is going to be the contributions. Okay, and then I would write a description, donated furniture, blah, blah, blah. And save and close. All right, so now notice I've got my furniture and fixtures, also an asset, right? Also increasing. Now my owner contributions are valued at $15,000 and the total equity is $15,000. So of course, anytime I'm contributing something of value into the business, I'm increasing the value of that business, right? Now the last piece. Inventory is going to be a little trickier here because unlike the property example, we can't do a journal entry, right? Because if I do a journal entry, you'll see there's no space here to indicate an item or how many of that item we're acquiring or contributing and what the cost of that item is. So we can't do a journal entry. Also, unlike the cash example, nothing's going through a bank account. So we can't write a check. We can't enter a bill because we're not going to pay that bill at any point, right? We're contributing the inventory. It's never going to get paid for. That's the whole point. So we have to do what's called a $0 transaction. Doesn't really matter if you do an expense, a check, or a bill. Makes absolutely no difference. I'll just do an expense because it's the first one on the list. Okay, and we're going to skip the category details here, and we're going to go straight down to the product or service. And I'm just going to pick on one of these products. And we're going to say we've got 100 of these at $2.59. Now, if I continued and saved this, we'd be recording a payment out of the bank account for $259, which, again, is never going to clear it. So you don't really need a payee for this. I suppose you could put yourself as the payee, the owner, whoever's contributing the inventory. But next we need to zero this out because it's not a transaction that's going to clear. Like I said, it's going to be a $0 transaction. So the category here is going to be the owner contributions account. And we need to zero it out. So if it's $259 after we've entered all the items we're contributing, then we're going to put a negative $259 here. That way it zeroes out, so there'll be no impact to the bank account. When you go to reconcile, you'll see this $0 transaction. You'll just check it off because it has no impact on the balance, right? So for those of you who don't have accounting background and experience, this may look confusing to you. So let's talk through this for a minute. We'll talk through this more for the sake almost of the accounting people who understand debits and credits. If you're a business owner and you don't understand debits and credits and you don't care to, that's fine. You don't need to. Trust me that in a minute when I click Save and Close, you'll see on the balance sheet that owner contributions will be increased. Inventory based on this will also be increased by the $259. So for those of you who care about debits and credits, let's talk through this for a second. I'm reducing the bank account, or whenever I write a check or record an expense out of a bank account, I'm crediting that bank account, right? The banks have us thinking about it backwards, but in accounting, credits reduce assets. So when I write a check out of a bank account, it reduces that bank, meaning it's a credit. Now what that means also is that anything that's in this detail part is being debited in terms of journal entries or transactions, right? So I'm debiting inventory $259 here, which is perfect because that's exactly what I'm doing. Inventory is also an asset just like cash, so I'm increasing the inventory by $259. But what's going on here? Well, we're hitting an equity account called owner contributions. Equity accounts work opposite assets, right? They're actually increased by credits and decreased by debits. So like I said, if we're crediting the bank account based on anything we do by way of an expense coming out of a bank account, and again, like I said, it follows then that anything down here in the details area is a debit, right? So we're debiting whatever account is put here, except that this is a negative amount. A negative debit is a credit, right? So this, in effect, credits owner contributions, which again is exactly what we want because owner contributions is an equity. We want equity increased by this $259. We're just doing it by doing a negative debit. That's why this is a little bit of a tricky transaction, but as you're going to see now when I hit Save and Close, it works perfectly. There's my inventory valued at $259, and now you can see my owner contributions has in fact been increased by $259. That, my friends, is what I hope you will feel and agree is a thorough explanation of contributions in QuickBooks Online. Contributions in QuickBooks Online explained. As always, if you have any questions, concerns, or comments, I'm pretty sure you know what to do. And don't forget, if you are watching this directly on YouTube or Vimeo, I always put a description and a link that will take you over to the write-up to fill in any gaps in terms of context. And, of course, you can post your comments or questions there or here or wherever. You know how to find me. Post your comments, but I'd love to get your comments, especially if you like this video, because that really helps me. So please, please, please help me to help you more by helping my rankings on YouTube, by commenting, liking, and sharing my videos. As always, I hope you had some fun here. I hope you learned something along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.